In February this year, Perth houses were selling in 9 days, units in 8, not from listing to settlement, from listing to signed contract. That's faster than most people take to decide what car to buy. And here's the thing, that wasn't a record, that was just a Tuesday in Perth's property market. Right now, Perth's median home value sits above $1 million. Annual growth is running at 26%, the highest of any capital city in Australia, and total listings are nearly 30% below where they were this time last year. So today, we're going to talk about how Perth got here, what's actually keeping this going, and what it means depending on whether you're trying to buy, sell, rent, or invest, because there's a lot being said about this market, and most of it skips over the parts that actually matter. And if you're new here, we break down property markets like this every week with actual data, not headlines. Hit subscribe and the bell so you don't miss the next one. Takes 2 seconds. Now let's get into it.
To understand what's happening in Perth right now, you need to remember what it looked like not that long ago. Through most of the 2010s, Perth was genuinely one of the softer property markets in the country. The mining boom had wound back, population growth slowed, and people weren't exactly rushing to buy. Listings were high, days on market were long, and sellers were having to discount more often than not. Then, something shifted around 2021, and it didn't just shift gradually, it moved fast. Since March 2021, Perth dwelling values have risen by over 91%. The majority of that growth happened after interest rate increases began in 2022, which is the opposite of what most people would expect. Normally, rate hikes cool a market. In Perth, buyers kept competing anyway. That tells you this wasn't just cheap money chasing bricks. There was a deeper demand story happening underneath it all. Perth now holds the third highest median property value in Australia, highlighting how far the market has moved in recent years. A city that was considered undervalued for a decade has, within 5 years, moved into the same tier as Brisbane and is now comfortably above the $1 million median mark. As of April 2026, the median dwelling value in Perth sits at $1,039,949, with house values reaching $1,087,507 and units at $759,687. That's the backdrop. Now let's talk about why.
The single biggest driver behind Perth's market right now isn't investor speculation. It isn't government stimulus, it's people. Western Australia recorded net interstate migration of approximately 12,800 people in 2025, its highest figure since the mining boom era of 2012 to 2013. And unlike the mining boom, which was concentrated in resources towns, this wave is flowing primarily into Perth's northern and southern corridors and the Mandurah region. And where are these people coming from? Mostly Sydney and Melbourne. Perth's median house price remains approximately 40% below Sydney's and 25% below Melbourne's. People are moving for affordability, employment, and lifestyle, and they're not coming empty-handed. A family selling a median-priced house in Sydney at $1.38 million can purchase a larger, newer property in Perth and bank $600,000 to $700,000 in equity. That's not a small amount. That's generational wealth being transferred from one city to another, and it's being injected directly into Perth's property market. Greater Perth accounts for 80.6% of WA's population, about 2.45 million people, and grew by 2.4% over the past year, double the growth rate recorded across regional WA. A Curtin University report published in February 2026 projected that WA's population is on track to hit 3.5 million by 2033 and 4 million by 2043. The report identifies housing supply as a binding constraint on sustainable growth. Professor Alan Duncan from the Bankwest Curtin Economics Center put it plainly: when housing supply lags behind labor demand and migration inflows, pressure builds quickly in rental markets, construction costs, and labor mobility. His words, housing is now functioning as economic infrastructure. Think about what that means. Housing isn't just somewhere to live anymore. It's a choke point for the entire economy of the state.
So you've got thousands of people arriving every month. Now, here's the problem on the other side. There's almost nothing for them to buy. Total listings in Perth were 29% below where they were this time last year. Homes are selling in just 9 days on average, less than a third of the national median. When you look at what a balanced market for Perth typically looks like, somewhere around 10,000 to 12,000 listings, and then you see the current figures sitting well below that, you start to understand the pressure. Why aren't more sellers listing? A few reasons. First, most people who bought before 2021 are sitting on enormous equity gains. If you bought a house in 2019 and it's now worth nearly double, your motivation to sell into uncertainty is pretty low, especially if you then have to buy back into the same tight market. Second, construction hasn't come close to keeping up. The National Housing Accord target of 1.2 million new homes by the end of the decade was set partly in response to migration-driven demand, but delivery is running well below the required rate. Labor shortages, material costs, and planning delays are all biting at the same time. ANZ Bank forecasts another 12.3% price lift for Perth through the rest of 2026, with for-sale listings remaining very low. But ANZ also believes that as the year progresses, higher interest rates, slowing activity, and severe affordability constraints will slow growth dramatically, predicting just a 1.5% lift in 2027. So the heat is real, but the window may not be as wide as it looks.
If you think the buying market is tough, the rental market is a separate kind of difficult. Vacancy rates in Perth tightened to 0.5% in mid-April 2026, meaning fewer than 1,000 rental properties were available across the entire metro area, according to SQM research. Let that sit for a moment. A city of 2.45 million people, fewer than 1,000 rentals available. Annual rent growth is running at 6.7%, matching Brisbane at the top of the capital city table and sitting well above the national figure of 5.7%. Perth's gross rental yield sits at 3.7%, above Sydney and Brisbane, reflecting a market where values, while rising fast, haven't yet compressed returns as much as other capitals. As of May 2026, Perth's median weekly dwelling rent has climbed to $730 per week. Houses are sitting at $750 a week, units at $700, and rental properties are still leasing in a median of just 15 days. For renters, the calculus is brutal. Rents are at record highs, there's barely anything available, and trying to find something in a suburb close to work or transport often means competing with 5 or 6 other applicants and losing. REIWA's 2026 market forecast points to continued upward pressure in areas close to the city and key transport infrastructure, with vacancy rates likely to stay below balanced market levels in inner and middle ring suburbs. The situation is pushing a lot of people who might otherwise keep renting to try to buy, which just adds more demand to an already stretched sales market.
As of this month, June 2026, there are some early signs of things beginning to shift, but it's gradual. REWIA data shows houses sold in a median of 14 days during May, while units sold in 13 days. That's still exceptionally fast by historical standards, but it's worth noting that both figures have roughly doubled since February, when houses were selling in 9 days and units in 8. REWIA President Suzanne Brown noted that if listings continue to increase and further interest rate rises occur, price growth is likely to moderate further in coming months. The RBA lifted the cash rate to 4.10% in March 2026, and market pricing points to further hikes ahead, adding to the cost of financing a home at Perth's current median of over $1 million. Julie Kelly, Global Sales and Marketing Manager at AussieProperty.com, warned that if interest rates rise to 8%, borrowing capacity for an average Perth household could reduce by 10 to 15%, which in a market where the median dwelling value is already above $1 million, could price significant numbers of buyers out entirely. But here's the thing, even with all of that, the rate hikes, the affordability pressure, the stretched borrowing capacity, Perth is still recording quarterly growth of 4.8%, while several larger capitals are already recording falls. Local conditions remain more seller favorable than the national average. The strongest growth right now is happening in Perth's outer and more affordable corridors. Suburbs like Serpentine Jarrahdale are leading Greater Perth with annual growth of 33.6%, followed by Armadale at 31% and Gosnells and Rockingham at 28.9%. Buyers who can't stretch to the inner ring are chasing value further out and pushing prices up there too.
So that's the full picture of what's happening in Perth right now. A market that spent a decade being overlooked, that then got hit simultaneously by a population surge, a rental crisis, record low listings, and a jobs economy that kept running hot. And the result is what we're looking at today. A median price above $1 million, houses gone in under 2 weeks, and renters paying $730 a week with almost no other options. The pace is slowing slightly, but the fundamentals haven't changed. More people are arriving, not enough homes are being built, and everyone, buyers, sellers, renters, and investors, is watching to see whether the RBA's next move tips the balance or just slows the climb. If this breakdown was useful, hit subscribe. There's a lot more coming on where Australian property goes from here.